Hello, everyone. I think we will make a start. Can you just confirm that you can hear me? Okay, I think I'm running on another PC here, but it's on a slight lag. So what I'll do, I'll go through the risk warning first of all. Then we can get into the slightly more interesting stuff. So this presentation is for educational purposes only. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 72.6% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Right, so I thought today we'd do a live stream. I think the last live stream we did was over the payrolls, the non-farm payrolls, which is a few weeks ago now. So I thought today let's do one, maybe a quick one over the crude oil inventories that were coming out. It will be released in about 15 minutes time, and we'll also do a session on wider trading strategies. I think I did something on this a few weeks ago, so I thought, well, let's do it again. It proved to be quite popular, so we'll do that, and we'll also take a look at the various other markets as well out there to see what looks interesting. So yeah, that's it, isn't it? So let's just talk about first of all what this inventories data is about and why is it important. Then we'll take a look at the oil price. So it's usually released every Wednesday in the afternoon UK time for me, so 10:30 in the morning Eastern time in the USA. It's the reserves of unrefined petroleum, which is measured in barrels, and I think the best way is to think of it as crude oil stockpile numbers, so how much stock is building up or has been drawn, all this sort of stuff. As a general rule of thumb, higher than expected inventories can weigh on the oil price. If there's more oil in stock, effectively, you'd expect that to weigh on the price, more supply. If the inventory number is lower than expected, it could suggest that there's a shorter supply and push the oil price higher. So you normally get a fair bit of volatility over this, but oil has been fairly low volatility recently. But we'll see. We'll see how the market reacts at 3:30. But I thought, well, let's start things off by taking a look at oil. I think we did do an oil video earlier in the week, or maybe it was at the end of last week. I can't remember. And we've got a few trades running on oil at the moment. So this is West Texas crude. And it's, I think the last video we did where we were looking at this, taking a slightly more longer term look, I was saying how volatility had really died off during the summer. We saw the price of oil trying to push higher, couldn't really do it. And, volatility really dried off. We did see things pick up in early September. So far, 36 has proved to be $37 a barrel has proved to be a really good floor for the price of oil. And it's jumped back up and it's in the middle of the range, so the top of the range is at 44, the bottom of the range is at 36. It's trading at $41 at the moment, so pretty much in the middle of the range. If we flip this over to an hourly chart, so where are we today? This is today, the 21st, and you can see if we go back over, the last 2 or 3 weeks, it's been pretty sideways. We've gone from 39.20 to about 41.60, a bit of a spike up yesterday, but it's come back into the range. So I have to say, I think it's a little bit boring, the price of oil. I think we do have a couple of trades going on oil, or I think we do. Here we go. There's a crude oil trade there from the 16th of September at 39.48. So that's about $1.50 a barrel in profit. But nothing really too exciting when it comes to the price of oil. So we'll see if that changes today. But like I said, what we're also going to do is do a quick session on trading strategies today. But basically looking at why do most people lose and what can we do differently. So there's the price of oil, pretty dull. Maybe we'll get a bit of volatility off this. I think I'd wait for the number to come out personally and see if there's a trade. If we make this a really short-term chart now, I think I'd be tempted to go against any extreme short-term extreme move off these inventories. So if we had a push up above 41.60, I could be tempted to be a seller, and if we had a push down to the low 40s, I could be tempted to be a buyer. But I don't think today's number is going to change too much. But let's take a look at some other markets while we're waiting for this oil thing to come out. I did do a trade today actually in my other account. This is, for those of you not familiar, we do 4 videos a week normally on YouTube, and we do lots of trades in this account, which is real money. It's just Capital's money. Clearly I've got my own trading account as well. I did do a trade on the S&P today ahead of the market open, and I thought it was interesting. US stock markets at the moment, it got absolutely clobbered. When was it? Earlier this week, on Monday of this week, the S&P came down to about 34.20. Tried to rally yesterday. This was yesterday's high. Came down again late yesterday, and came back down again today, 10 o'clock and 12 today. So it's quite interesting, I think, on the S&P at the moment, US stock markets, the lows from this week have continued to hold the market up. So I ended up buying, I think it was this morning, about 30, let's call it 34.40, about there, 34.40 today on the S&P, with a stop the other side of the 34.20 lows. So it'd be interesting to see how much legs it's got left from here. But I think all markets have been perhaps a little bit tricky at the moment. I mean, there's the S&P on the daily chart. It's sold off in September, rallied, but we haven't taken out those early September highs at the moment at the S&P. So it's a bit of a sideways market, perhaps, if we're looking at it from a 6-week perspective. If we look at gold, I know gold is a popular one. Let's take a look at the gold price. Have a look at that. So here's the gold price. I think this has been picking up over the last what is it? 3 weeks, 4 weeks now. We had that sell off from the highs 2075, came down to those lows 12th of August, down to about 1860. Tried to break lower late September. Couldn't really get much of a move past those lows, and since then we are trying to build a recovery in gold. If we try and flip this over, there we go. I think the last gold video we looked at, this was the trend we were looking at, and it's been sort of messing about near that trend line, and you can see there, we have sort of just about held on the trend line. We've flipped below it a bit, and now trading up at pretty much its highest. We've got to go back a couple of weeks, but for me, I still think the price of gold still pretty much positive from here, and I'll be looking for a run back up to maybe 1970 initially from where we are at the moment. So that's one that's been I think that's the interesting market, perhaps one of the more interesting markets at the moment. Silver, I think we've got a few trades on silver going from, where is it, from $24 on silver. So silver's currently 25. So again, I think like gold, that trend line's a bit messed up on silver, isn't it? I think that's a longer term trend line on silver. So like gold, silver has been trying to build this base, I think, and build a recovery since mid-September. So silver looking pretty much like gold at the moment, but for me, that still looks positive. Oh, someone's asked about Bitcoin. I've actually done a video on Bitcoin today. It will be going up. It should be going up this evening. The latest update on Bitcoin. I think it's really interesting. Actually, the price has moved $500 since I recorded the video. I did the video this morning. I think it's really interesting, Bitcoin. Without spoiling what's in our video, whenever we've seen Bitcoin run up above 12,000. Sort of recently, I mean that's an extreme one, but let's go back to here. Over the last year, whenever we've seen Bitcoin up above 12,000, it hasn't lasted long. So I think it's really interesting up here. I think we do have some Bitcoin trades on as well somewhere, if I can find them. They're down here. So buying in the 3rd of September at 10,800. So they're doing okay. And I think Bitcoin it's really interesting up here. And so we'll have a look at this in the pre-recorded video that's going up later. So again, if you subscribe to us, you'll get an alert when that goes out at some point this evening. But Bitcoin, I think if we could hold up sort of 12 to 14,000, I think that we can start coming out with much more aggressive targets. But I think we're very early in the move here, and I'm just wondering, are we going to see it basically just dump again as it has been doing whenever it gets above 12,000? So I think it's going to be a really interesting market to watch the price of Bitcoin. Someone was asking about natural gas. We've got a trade on natural gas. I think we've got trades on everything at the moment. We've got trade on natural gas as well. That's really interesting, isn't it? This is a popular market, natural gas. I must admit, it's not one I'd looked at much until we started doing these videos about a year ago. But it's on a rip again, isn't it, natural gas? So for me, I think the last trade we did, where is the natural gas trade? 12th of October at 3.16, 3.17. So 12th of October would have been in here somewhere. So just about here when it broke out again, I think. And it's strong, you know. I'm a big fan. If you've watched any of the videos that we do, I'm a big fan of trying to identify and follow trends. And clearly we've got a definite trend going on with natural gas up here. I'll be wondering to see what happens at 3.5 through 350. So only a little bit higher than where we are now. So perhaps we have a bit of a problem area coming up at 3.5. So we'll see. We'll see what happens with natural gas. Someone mentioned dollar yen again. I think we did a video on the foreign exchange pairs yesterday. Dollar yen is still a bit boring. I think we do have a trade going on. Oh, it's taken a bit of a hit today, isn't it? Did a video on 4 foreign exchange pairs yesterday, and I was wondering if we were going to see dollar yen break through this downtrend that's been in place since March, and clearly not. That's the biggest move we've seen in dollar yen for quite some time today. So going from 105.50 down to about 104.50 at the moment. So we've seen a 100-point move today in dollar yen. I think it's going to be interesting because 104 has been, if we flip this over to an hourly chart, a really good floor for dollar yen. You can see it here, the lows end of July, the lows in whenever it was, September. So for me, I would be tempted, I must admit, if I was watching this on the hourly chart, I'd be tempted to be a buyer when it stops falling. Maybe tomorrow, but it's quite interesting to see if this 104 level holds again. Let's go back and look at some other markets. I think one of the trades we did on the live stream, I think it's going back a bit now. Hang on a second, but I think it was the price of copper, and I think copper has pushed out to its best levels is it about 18 months or something like that? I can't remember, but this is an interesting market. So this is copper. It's not one we cover on our regular videos. I do have a trade on it in another account, but I thought it's interesting because clearly it's gone off those March lows from 2. The price has gone up by more than 50% at the moment. I wonder if we'll start to hit some problems in copper when we start nudging back to these June 2018 highs. But it's been an interesting market over the last few months, the price of copper. Let's take a quick look at euro, then we'll take a look at the oil price and see what's going on when these inventories are coming out. I'm just trying to keep an eye on the number coming out at the same time. So euro dollar, we do have, someone asked about the swaps on euro dollar. We'll look at that in a minute. We'll look at that when the inventories are out. So here's euro dollar. So euro dollar, again, the euro against the US dollar. It's been a great trade off those lows, those March lows. Bang, 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 bang. Then accelerated, of course, mid-May. It's been a little bit boring again during the summer. You know, I don't know what your experience of FX has been, but I found it quite frustrating over the last few months because opening lots of trades, but no real trend getting going. So a bit of an odd one. But the euro again pushing back into that range. I do think, for me in the short term, the target for the euro is a run back to those September highs around about 120. And I think if you can finally break 120 on euro dollar and hold above it, I think I'd be targeting a run back to the 2018 highs at 125. So I think it's interesting here. It's been a bit frustrating over the last few months because it's trading now pretty much where it was the end of July. That spurt sort of ran out of momentum, but the bigger trend for euro US dollar is still up. Right, so we're getting some of these crude oil inventories. Crude oil inventories fall by, is it 1 million barrels, which was expected. That was expected. Let's take a look. Let's take a look at the oil price and see what we're seeing in crude oil. Are we seeing any excitement whatsoever in crude oil? No. I think because the inventories have come in pretty much as expected, that inventory number. I think there was expected to be a draw this week of 1 million, and it looks like that's what we've got. So you can see not much change really here. Before the number came out, the price was what was it, $40.93. We're currently $40.96. So that's made a massive 3 cents difference there in the price of oil. But I suppose, maybe the market was a bit nervous ahead of that. So I suppose the aggressive trade here, we could be a buyer. Let me just see what's gone on so far today. The lows for yesterday were in at $40.47-ish, or yesterday afternoon. We could be a buyer with a stop at, I don't know, $40.35. Let's put that trade on and see what happens. So let's buy that. We'll put a stop in at, what did I say, $40.35. We'll only risk £100 because I don't really like these short-term trades just based off the news, just for entertainment purposes. So here we go. I'm going to buy 180 barrels with a stop at 40.35, which means my risk is 105. Blah blah blah. Let's go. Let's do it. So we bought crude. So we bought some at 41.09. Is where we got filled on that trade. Let's see how that goes. So no surprises from the inventories really. Maybe the market was a little bit nervous ahead of that. So I don't think it's going to make that much of a change to oil really. And I think it's still a dull market. I think oil, perhaps understandably, is playing the game of waiting to see what the economy looks like. I mean, clearly we've got the virus, has come back in Europe, or we're having this second wave, whatever you want to call it, and we're seeing various lockdowns. So it's very unclear, I think, the economic picture from here over the next few months. So not surprising to see oil like that. Someone's saying the audio is low. I think it's okay for most people. I think most people can hear me. So hopefully, I think we had a bit of a dip in the stream health according to YouTube. So, but I think hopefully the audio is loud enough. Right. So, what are we going to talk about now? Well, we were looking at some of the markets, weren't we? We'll have a quick look at pound against the dollar. Then we'll go on and talk. I'll do that swaps thing. Oh, the pound had a bit of a lift. Pound against the dollar. I still think, despite Brexit, despite who knows what's happening with Brexit, with the UK and Europe, but the market, the pound, is not going down. We did have a wobble in September, but again, we are seeing dollar weakness, which is why we're seeing the likes of gold and the euro going up clearly. The pound today trading at 131.40. So the highest it's been since the 25th of August. So we're at 2-month highs on the pound. It's interesting up here, the pound, because of all the Brexit stuff as well. But we do have, 135 was the high from December 2019, and also the high at the late August. So I think we are going to go back on pound against the dollar to have a look at those old highs at 134 to 135. We'll see. We'll see how it turns out. And just someone was asking about swaps. Clearly, when I'm trading here, I'm trading using CFDs, contracts for difference. So it's a leveraged trade. So there is an overnight fee to pay. And you can see all the overnight fees here in my account because of all the trades I've got running. But on that euro dollar trade, so I've got 2 trades running, one of 20,000, one of 13,000. So I'm paying £1.62 overnight for that trade. And one of those trades has been running since May. So how many months are we into that? So whatever the maths is, May to now, and about £1.60 a night. So it's cost me about, what is it, 40 quid, 50 quid a month on that trade, which is currently up about 13.64. So the financing costs you do need to think about when you're trading CFDs, which is why they're not really suitable for longer term trades like this. So the trades we tend to do tend to work for sort of 2 to 3 weeks normally, but because the euro's had a bit of a move up, we've been in that trade for a long time, so the financing cost will definitely have mounted up there. And yeah, someone's asked about dividend adjustments. Yeah, if you're long the stock, you will get dividends. If you're short the stock, you pay the dividend. Right, let's have a quick look at oil. Then we'll flip back and we'll talk about some trading strategy stuff. So I'll go through some stuff that I think is pretty simple. Oil is not really moving at all. It's 40.89 now. So if I show my position, so I bought in there at 41.10. So I'm down about 20 cents at the moment, but I've got a stop loss. So I'm down. You can see it here, my P&L. I'm down £6 something at the moment. We'll come back to that and see how it fares. But let's talk through some trading strategy stuff. We've got the inventories out of the way. No real surprise there. So let's go through some stuff on the inventories. So we're going to go through, I think the most important thing we're going to cover now is why do most people lose? So what can we do to avoid being a losing trader? If you remember right at the beginning, everybody now has to have a risk warning. So all brokers have as part of their risk warning what percentage of clients make or lose money. And with us, 72% of retail investors lose money. And that's a typical number, sort of 70 to 80%. If ever you look at these risk warnings, you'll see that probably 7 out of 10 people lose money trading. So if we can understand why do people lose money, perhaps it can help us to avoid losing money. And I think if there's only one thing to remember from today, forget about the oil inventories because they weren't that exciting in the end. But remember this. This was really interesting research done by a US foreign exchange broker looking at their customers, and it looked at millions of trades over slightly more than a year. So from the 1st of March 2014 to the 31st of March 2015. So about 13 months worth of trades. And so the various markets they were trading down here. And the really important thing, if we pick a market like pound against the dollar, a really popular market like that, the average winner made about 40 pips, okay? And the average loser lost more than 80 pips. So you can see straight away, this is the reason why most people lose money trading, because this pattern gets played out for most people over the vast majority of markets they trade. So their losses end up being, on average, about twice the size of their winners. So if you've got a strategy where if you're wrong, you lose £200, and when you're right, you make £100, hopefully you can realise that's not going to be a profitable strategy. So you've got to think about trying to stack the odds in your favour, right? Trying to make sure when you're right, you're making a multiple of what you lose when you're wrong. And I do this with the trades that we do on this account, and for the for the various videos we do. If you look at, we've got lots of trades running at the moment. So these are real trades with real money. Look at the S&P trade here. So the 21st of September S&P trade, I bought in wherever, and the market is currently 180 points ahead. The risk on that trade was £250. At the moment, that's up £430. So I've moved the stop on that. Okay, my risk was £250. So when the market moved enough in my favour, I moved the stop. But if you look at the trade above, from the 7th of October, buying in at 33.91, the market's currently 34.56. I'm only up £75 on that trade, okay? And my risk was £250. So I think I would be pretty stupid to take profits on that trade now, okay? If I'm happy to risk £250 at the beginning, I personally want to see the market move at least £250 in my favour to think about moving the stop. Otherwise, I'm going to be in a situation like this, where I'm risking 250, for example, and then snatching at a £70 profit. So it's why you see a lot of the trades running on this account, because it's been a fairly quiet couple of months. Gold is in profit slightly, but my stop loss would still make a loss on this trade because it's not enough in profit to move the stop. Bitcoin, if it moves another £100 in profit, I can move the stop. So it's really important to think about that balance between risk and reward. The same down here with the pound against the dollar trades, which have clearly done okay today because we've seen strength. But my risk on both of these trades was £250. They're in profit, but they're not enough in profit for me to think about moving the stop. So really have this picture almost frozen in your brain when it comes to trading. You want to have a strategy where your profits are much bigger than your losses, because trust me, you're not going to be right much more than 50% of the time. I think everybody comes into trading thinking, oh, I'm going to be right 70% of the time, 80% of the time. You're in for a rude awakening, I think, quite probably, if you've never done it before. So we need to think, well, if I'm only right half the time, how can I make money? And the way to make money is to have our profits much bigger than our losses. Next point, too much information. If you watch the videos that we do on the various markets throughout the week, and like today, if you look at the chart of oil, I do not have a million different indicators on the chart. I do think that many people these days have far too much stuff on their chart, and they end up not being able to see the wood for the trees. And I think the problem is, if you build up your charts and put all these indicators on, you end up ignoring the most important thing. And the most important thing is the price. So for me, I'd say if you do stick with one indicator. Don't put so much stuff on there and clutter up the chart and miss what the price is doing. But I think plenty of people these days, they think there's a holy grail out there, and I just need to put loads of indicators on the chart and it's going to make me loads of money. It's just not true. So I think you need to focus on price. So I'm a big fan of keeping things simple. So first of all, I want to trade with the trend. So if we pick, what should we look at? Let's look at pound against the dollar, because that has been moving today. Or perhaps gold, actually. Perhaps gold's a better one, because we haven't had such an extreme move in gold. So for me, if we flip this over to a daily chart, clearly, so the trend for gold is up. Okay, depending on what time frame you're trying to trade, but it was only 2 months ago we saw the price of gold hit fresh all-time highs. By definition, that is an uptrend. Okay, it's a market that's going up. So if the trend is up, I want to think about buying into the trend. So I don't want to try and call the top for the market. The next thing I want to think about is, where's my stop loss going to go? So stop loss is really important. So for me, if I was a buyer now, based on this daily chart, I'd want my stop the other side probably of these lows here. If I'm looking at the daily chart, I want it the other side of here, the other side of 1848. Perhaps I look at the hourly chart and come up with a tighter stop. So the tightest I'd want my stop at the moment, if I was trading gold, is currently trading at 1929. I'd want my stop at least down here at 1880, but probably the other side of these lows from October. Because again, I think the mistake plenty of people make is they don't place a stop loss, in which case they'll probably end up getting into a losing position and not knowing when to get out of it, and hoping the market comes back in their favor and are racking up a big loss that way. And then I think those who do place stop losses place them far too tight, far too close to what's going on in the market. So for me, I want to give it room to prove me right. Then think about the risk versus reward. And this goes back to that whole idea of having your potential profit a multiple of your stop. So I mean, it's a bit of a time machine trade, but I think that the really good trade for gold would have been back here when it was at 1880, around that sort of level, because we've seen it break through the low from August. That was at 1860, but it only pushed as low as 1848. We didn't really get any follow through. So if we were a buyer at 1880, we may have had a stop loss at 1840. So we've got $40 risk. But if it's going to go back to those all-time highs, we've got nearly a couple of $100 upside. So you're risking 40 for maybe $200 profit. So I think it's really important to think about the risk reward of the trade. Think, well, is this trade really worth doing? Is it really worth if I'm going to risk X, am I going to have a multiple of X? So it's really important to get that balance right. And I think you do that by figuring out, well, where's my stop going to go and what's my target for this trade. And the final thing is just to do it. I think too many people will waste far too much time on demo platforms and paper trading. And you can open an account and have a demo platform with us. But I think the best way you learn what works for you, for your particular strategy, is to do it. It's like the oil trade. I don't know if the oil trade's going to work out, but I said, well, let's do a trade when the market's open and see what happens. We've got the stop loss in place, wherever that was. I've forgotten where it was now. Down at $40.40 or something down there. So we've got the stop in place. So I'm happy to run the trade. But I think the only way you find out what works for you is to actually place the trade, is execute the trade, is to get on and do it. Don't be one of these people who sits there playing around with a demo account for 2 or 3 years. Because I think it's one thing to trade with paper money and another thing to trade with real money. The mindset is completely different. And the Holy Grail, there isn't a Holy Grail. You need to accept you are going to be wrong. I think it would be quite interesting to go back through this trading account and go through all the trades since we started trading. So I started trading this account in the summer of 2019 with £10,000. So it's currently sitting at £15,000. But I would guess that at least half the trades have lost money. If I went back, and maybe I'll do that for the next live session we'll do. I'll go back through all the trades and break them down in a spreadsheet. So I would guess that half the trades have lost money. But we've caught some really great trends. The trend in gold was one we were in on the daily chart. And that made, I think, a couple of £1,000 in the end, something like that. So there is no magic system. But if you can put yourself in a position where your potential profits are much bigger than your losses, then it's just applying your strategy and trading these different markets. Like at the moment, most of the trades at the moment, there's a loser in there. The dollar index, big loser, down 160. Crude oil up slightly overall, but S&P up 430 on the S&P. And then the bigger trades like Apple up twice. I think when I put that Apple trade on, the stop meant the risk was £200. So we've made 2 times the risk on that. The Euro trade down here somewhere made 6 or 7 times the risk on that big winner of a Euro trade. So the point I'm making is there's no magic system. You are going to be wrong, but it's keeping the losses manageable and having, when the market is really going in your favor, to run the position. I think someone's asking about the stock split on Apple. I think I did that trade on Apple after the stock split. Okay, so there's the Apple trade there. So I bought them at 91.75, and that was after the stock split. Yeah, so it wasn't during. It was because they split in the summer, didn't they? They did a 4-for-1 or a 5-for-1 or something. Just one quick thing: if you're in the UK or Ireland, we've launched spread betting in the last couple of months. So if you want to try spread betting, go to Capital.com. You can open a spread betting account. Of course, we have to say profits are tax-free, but tax laws can change. But if you're UK or Ireland, you get tax-free profits with spread betting. With everybody else, it's CFDs, as I've been trading here. We'll jump back and have a look at the markets in a second, but just in case anyone has to disappear, if you have any questions afterwards, drop me an email. My email address is david.jones@capital.com. You can follow me on Twitter @JonesTheMarkets. You can open an account and get access to all of the markets we've looked at today by going to Capital.com. And follow us on YouTube. Like I said, we do have that video on Bitcoin going up a bit later. So if you're watching on YouTube now, which you are, if you press the subscribe button, you'll get the notification when we upload that video. Let's go back and have a look at oil. So I think, markets to watch the rest of this week. What's going to be interesting? As much as I hate to say it, because I'm not a fan of Bitcoin, my trade's not doing very well on oil. There you go. There's a lesson. We shouldn't jump in and do impulsive trades. So the trades we just did on oil are losing money. Where are they? 21st of October. So we're down about 24.38, about 40 quid, I think, on those oil trades. A little bit premature on that one. Buying in at 41.10. I'm probably going to get stopped if it breaks below the lows from yesterday afternoon. We'll see how that works out. But I think the interesting markets to watch. Bitcoin is interesting. I am not a fan of trading Bitcoin, but I think it is interesting up here. It's calmed down a little bit, but just because 12,000 has been such a problem for Bitcoin for the last 15 months. So it's really interesting up here whether Bitcoin can hold 12,000. So I think that's definitely a market to watch. US stock markets, of course, the one I watch is the S&P 500, just because we've seen fairly choppy trading over the last few months, but so far at least the lows for this week have held for US stock markets. Whether that ends up being the case depends to be seen. I think Tesla have results out. It must be later today, mustn't it? Tesla's results are out, I'm guessing, after the market shuts this evening. Tesla, absolutely fantastic trend on Tesla, of course. It has lost some momentum over the last 6 weeks. Big support down at 300, big resistance up at 540, and we're pretty much in the middle for Tesla at the moment. So they've got results out a bit later. I think that's always an interesting one to watch. And slightly calmer markets is gold. Where's my gold chart gone? I think I've taken it off my list. But the price of gold, as it's pushing higher from here, I think it is still recovering. I still think we could see the price of gold push higher and go back and have a look at those all-time highs again at some point before the end of the year. So lots to watch. I'm going to wrap things up there. So if you have any questions after, drop me an email. We will be doing another live stream. What's the date today? It must be perhaps 2 weeks on Friday, whenever the non-farm payrolls are out. And they're always quite exciting because that does actually move the market usually. So again, if you're subscribed, you'll hear about the live stream then. But we do these 4 videos during the week on various different markets, pre-recorded. So you can watch those on our YouTube channel. But I will wrap things up there. Any questions, as I say, drop me an email. Be interesting to see what Tesla's results look like this evening. Hopefully see you on the next live stream. To open an account and play around with all these different markets we've looked at today, just go to Capital.com and you can do it all from there, or download it onto your mobile device and do it from there. Okay, I'll wrap things up there. Enjoy the rest of your day.